Hello and welcome. Are you ready for tomorrow? That's the question we pose to our clients, and that's the offer we give them, to equip them to be ready for tomorrow. But the question you'll be asking as investors and potential investors in MindGym is MindGym ready for tomorrow? And that's the question we plan to answer over the coming minutes. My name is Octavius Black, and I'm joined today by Richard, my CFO, and Elaine, our Chief Digital Officer. The agenda we're going to be going through is to briefly touch on the half-year results, to talk a little bit about current trading and what we're seeing for the rest of this financial year, and then, in the main, to focus on the enormous market opportunity and how we plan to realize it. First of all, to the half-year results. There's only one thing that's taken over the whole world, not just the business world, and that, of course, is COVID. We, like every other business on the planet, have been affected by it. When COVID hit, first of all in Asia in late January, early February, and then spreading across the world, we noticed that a lot of our clients moved away from being able to even talk about the kind of strategic issues about helping their employees and leaders flourish to dealing with the operational issues. What's my sick pay policy if people self-isolate? How do I keep my contact center open with 2 meters distancing, and so on and so forth? Much of the activity that had been planned, big leadership conferences and far-flung places, were immediately cancelled. And a lot of live events that could have been converted or changed, clients said, no, well, actually, we'll hold off for now. We think we'll be back in the office in a few weeks' time. So we did manage to keep things stronger than they might otherwise have been because we have a strong virtual offer. That's a live in-person coaching delivered on platforms rather like this one. We've been doing it for 10 years and it's incredibly strong. But for many clients, that wasn't what they needed at the time and they didn't have a chance to focus on it. So not perhaps tremendously surprisingly, revenue collapsed much further than we would have wished in the first half of the year, down 40%. The good news was that pure digital revenues continued to grow. This is the self-starting in your hand or on your PC anytime you like. And also our digitally enabled revenue grew. And this is where we're delivering the live sessions through platforms like this. Those also managed to have record levels of feedback, even higher feedback now than in the in-person sessions, which is a tremendous base from which we continue to build. We, of course, also looked at our costs. When revenue drops at that level, playbook is to cut whatever costs you can. And we looked strongly, first of all, at salary sacrifice. Seven Eyes co-founders stopped taking a salary altogether. The rest of the company took a 20% salary cut, or went part-time, or went on to furlough. And then 3 months after, into the first half, we then looked at a restructuring. A number of the roles were removed from the organization, and we overall, during the first half, have, instead of growing our people costs, which we normally do to support the growth in the business, we reduced them by 9%. We didn't stop all investments, and we continue to make good investments, and I'll come more to those in a moment. But I think the important thing to highlight here is how this has all been possible. And for those of you who've been following MindGym, you'll know we've had a 20% compound annual growth rate for 4 years and 10 months until the end of January at the beginning of this calendar year. And that has generated a significant amount of cash because it's a very cash positive business. A number of you said a year ago, what are you going to do with all this cash? To which my answer was, we're going to save it for a rainy day. Well, a rainy day is exactly what we've just had. And because of the cash, the business has been incredibly secure and protected. And we continue to make the investments, not just the digital investment, which is the main purpose of this conversation today, but other investments that will secure our future. So I'll hand over now to Richard to give a little more detail about the numbers for the first half.
Octavius, thank you. And good morning, everybody. I just want to start by sharing a few of the numbers that supported our H1 position. Globally, we saw a 40% revenue decline in the 6 months of the 30th of September 2020, or 39% in constant currency terms. As clients went into crisis mode and many courses were cancelled, including all our face-to-face deliveries. This time last year, we reported a 20% increase in constant currency terms, which is in line with our 5-year compound revenue annual growth rate. We continued to trade at that level up until January 2020, before COVID started to impact. We maintained high levels of repeat revenue at 87% compared to 92% in the first half of last year. We define this as revenue from clients who have spent in one or more of the previous 3 years. We were encouraged to see that despite COVID and the challenges it brought, business came in from new clients with work on topics including manager development, diversity, ethics and inclusion, and personal effectiveness, accounting for 78% of new revenues. Perhaps unsurprisingly, tech, finance and pharma sectors generated the highest revenues and accounted for 6% of total revenues, though were still down on last year. We saw COVID impact both regions. EMEA was down 44% on last year, and the US at 37% or 35% in constant currency. The US was marginally less hit for no particular underlying reason, which saw their mix of total revenues grow to 60% from 57% in H1 last year. In terms of product mix, pure digital revenues from our set of ATE workouts increased 7% on the year, lifting from 8 to 15% of total revenues. All our live sessions were delivered virtually this year, something we have been doing for 10 years, and we saw a 57% increase on the year as face-to-face deliveries were suspended. Client reaction to the virtual delivery was very encouraging and was reflected in our participant feedback scores. 54% of participants rated delivery as excellent, and compared to 52% last year. Pure digital and live delivery sessions we define as digitally enabled revenue, which increased 43% and represented 73% of total revenues compared to 30% last year. In terms of our financial highlights, we saw a significant increase in gross margin to 88%, up 9.5 percentage points on the year due to the increase in digitally enabled revenues. Pure digital development costs on existing products are expensed and there's very little incremental cost. Virtual live deliveries, although lower price than a face-to-face delivery, have a lower coach fee, recognizing the coach needs less time as he or she does not need to travel. There are also no course materials with virtual deliveries. We delivered an adjusted loss of 1.3 million before tax. There was a 9% reduction in average people cost year on year and a 1% reduction in average headcount, excluding digital, which are capitalized. We made temporary reductions, as Octavius mentioned, through salary cuts, part-time and furlough across the whole workforce, April to June, and then permanent reductions where we saw fit in July. At the same time, we started to increase investment in marketing and other areas. Despite the loss, we were encouraged to see positive operational cash generated as working capital continues to improve. Trade receivable and accrued income days reduced on the year by 23% to 65 days from 85 days at September 2019. Overdue debt has fallen from 24% of trade debtors at the 30th September last year to 14% of trade debtors. Debtors over 60 days also improved and reflected as 2% of total debtors this year compared to 5% last year. We've not seen any material bad debts from COVID at all in the first half. Cash at bank at the 30th September was a healthy 14.5 million after 1.2 million capital spend on digital in the period. Now let's take a little look at current trading. This chart shows the percentage growth in revenue by month on the previous year. As I mentioned earlier, and as you can see on the chart, January 2020 was roughly 20% year on year in line with our 5-year run rate. We then saw February and March fall as COVID impacted us initially in Asia, where we were delivering a large program to a bank, amongst others, which abruptly ceased all activity. The current financial year, starting in April, was extremely challenging as we were trying to mitigate the loss through promotion of our digital and live virtual offers to some success. However, many clients were in crisis mode and wanted to cancel. In July, client conversations started to pick up, and from August onwards, we have seen an improvement. September was minus 29% down on the year, October minus 15%, and November is looking at minus 4% with a week or so to go. December is looking encouraging too. However, Q4 is harder to call, as is the nature of the business, though current lockdowns could also have an impact. September, October, and November will all be profitable months, and I will now hand over to Octavius to update on our OPEX investment plans.
Richard, thanks so much. And the playbook, if you like, in times of crisis is to cut all costs, to protect margins at all possible abilities. We don't really play by that playbook. What we've done is to look at where should we continue to invest for growth. And that history of investing for growth is focused on two areas in particular. One is marketing. We've increased our overall spend on marketing by over £1 million this year versus last year. We focused really strongly on how do we build the brand for the future? How do we get known and credible and recognized amongst the C-suite of the Fortune 500 and FTSE 100 organizations of our clients as the equivalent partner of the business schools and big management consultancies they tend to go to for human capital challenges? And at the same time, how do we build a brand that connects with individual managers, contributors, and leaders within organizations so they choose to sign up to MindGym as the way to improve themselves? So we brought in one of the best agencies for identity in the world, Pentagram, and they're working on a rebranding, and we have a separate team working alongside them on a new website, all of which will be launched in the summer next year. So we're investing now, but we won't get the return until we're actually out with the new brand, the new website. We have some campaigns, but we'll have many more to support them. We'll have new systems, and we are building a really strong marketing team. So it's investment this year to pay off next year and for the years to come. In the same way, we've been investing, as those of you who have been following us will have noticed, in new, strong leadership. We have a new president of the US business who previously ran a company with over 30,000 employees. He was a CHRO of two major organizations in the US and has been a MindGym client for almost a decade. He was so impressed by the impact that we had on the organizations that he was leading that he decided to join us and is leading the charge in growing our US business. We have a new chief commercial officer in EMEA. She comes from a background both in-house and is heading up the leadership development practice for one of the major consultancies. She recognized that MindGym was very much where things were heading, and so she moved to come and join us. We have a new chief digital officer, Elaine, who you'll meet in a moment, who was not only previously at HSBC, but has held senior positions at many startups and successful digital grow-ups. And a new chief people officer, and there are more to come. This is all about reducing founder dependence and having the strong leadership cadre that sets the business up for continued long, sustainable growth. So this is the story about why we're investing now. What we now want to talk about is where we're looking at as the opportunity for the future. We see an enormous opportunity for market disruption. But actually, it's not difficult for people to come up and say, I see an opportunity for market disruption. And the question I imagine you will be asking is, what history do you have of challenging the market and being successful at doing it? And the answer is, it's what we've been doing for the last 20 years. Where others zig, MindGym zags. At the very beginning, we talked about behavioral science and psychology before Malcolm Gladwell had even written his first book, Blink, and before any of the big TED Talks were taking place. At the time, you'd ask someone if you could help them with use of psychology. I remember one potential client saying, well, I'm Capricorn. What does that tell you? Well, it tells me you don't know the difference between astrology and psychology, is what I thought, but didn't say. We were the first to come up with bite size as an alternative, when at the time, bizarrely enough, people said you couldn't learn anything useful in less than a day's course. We started with scalable live delivery rather than starting with digital, because we believe while both were possible, the scalable live delivery was much harder and gave greater differentiation. We went to proven when the market was all about custom, and we published 4 books, including an international bestseller, which amazingly enough got to #2 on the Amazon UK behind Harry Potter. But it's unusual not because of that necessarily, nor because of the fact that the first chapter is called Don't Read This Book. As psychologists, we know if you tell someone not to do something, there's a greater chance they will do it. But also, as you may have noticed from this front cover, there are no named authors. That was unprecedented at the time and widely advised against. But actually, it helped build the brand, it helped differentiate in the market, and it helped create enormous awareness. We introduced virtual live deliveries 10 years before COVID. We've been publishing research papers that challenge the orthodox views on things like diversity and inclusion and management development and performance management for a decade now. And thanks to many of you on this call, we have become the only behavioral change startup to grow organically to 50 million and IPO on the London Stock Exchange. So we've done an awful lot of market disrupting and challenging, but I think the biggest market disruption is yet to come. So before I hand over to Elaine to talk about how we're doing it, I wanted to share a little bit about the opportunity as we see it. The first thing to notice is that this market is vast. There's $100 billion spent with external providers on the sorts of subjects that we cover. And if you think about the money that's currently spent in-house, which is also an addressable area, then of course the market's even bigger. It's been growing as well, mid to high single-digit percentages up until COVID struck. And actually, there's a good chance it will continue growing, possibly faster, as issues like ethics and diversity and inclusion and well-being become center stage and a greater priority for boards and for executive teams. So we have a very large market, but we also have a very fragmented market. As you break it down, you discover not only are there lots of different sub-segments, but in each of those, there are dozens of or more of players in that market. There are allegedly more human capital and training consultancies in the UK than there are hairdressers, which gives you a sense of that enormous fragmentation. And even the largest ones, the big HCM consultancies that you may have heard of, are still not even 1% of the market size. Now, of course, we're not the only people to have spotted that we have a large, growing, profitable market that's highly fragmented. And as you can imagine, many others are putting money and using their best resources to try and realize this opportunity. In a market where you have one player or one business model that's succeeding, what you'll often find is that they attract and build and acquire mini-me's. But in this market, there isn't one business model that's succeeding, or else we wouldn't have this enormous fragmentation that we've got now. So what we see is the opportunity to create a new business model that disrupts the market and starts to build scale. The first thing to understand about why we see this opportunity is to know how clients buy today. So if you imagine the client in the middle, the CHRO, or the Chief Learning Officer, or the Chief Talent Officer, is buying skills and resources and training and development in a whole range of different areas, and each of them from a range of different suppliers. The exec leadership might come from one or two business schools. Maybe there's a consultancy. Maybe there's a learning and development professional firm. Maybe there's a separate string of coaches who come in and help and support. So that we've illustrated this as different shapes, as if there's one provider for each. In many cases, there are dozens of providers for each. And that's at the center before you get into the regions and you get into the different functions. And each time a new program is developed, it can take 12 to 18 months to get it up to speed, from initial needs analysis and getting exact commitment to choosing a partner, piloting, testing it, preparing for launch, and finally rolling it out. And then the shelf life of that program can be just 12, 18, 24 months before the client moves on to a new role, the individual, and someone else joins, and the program's half-life has passed, and someone who comes in to start this whole process again. Now, this is incredibly resource heavy. It's arguably quite wasteful. And an enormous effort is made trying to integrate all these different activities that are going on. It's a Sisyphean task. To understand how we get one single science-based approach that unites all of these is beyond the ability almost, or capacity more like, of any individual that sits at the center of an organization. So therefore we have confusion or potential disruption, we have potential waste, and there's value to be unlocked. So as we're looking at it, we went out to talk to our clients to say, how are you seeing things? And what they're saying, and this is broadly research from CHROs, is that what we want, bottom right, is our people are more committed and more capable, so they drive business performance. And the way we're going to get it, top right, is always on, agile, available at the moment of need. End all these waterfall needs analysis and program development. We want something that's constantly live, constantly changing. End of programs, start to have journeys. But everyone says we need a blend of live and digital. One without the another is not sufficient. They're both are necessary. The more we can customize and make this ready for individuals, the better off we're going to be. The more we can use proven assets where we can, so that we spend our time designing things that only we can design, that are particularly unique to our organization. And the more we can scale globally, the more useful any solution will be. So this is how the market presents itself, both the challenges that people have and the needs that they articulate that they want. What we see as the future is a combination of aggregating and integrating. And we've called that, in summary, the behavioral change ecosystem. And the elements that need to be aggregated and integrated are, in summary, at a high level, as follows. The first is to have strong content. As we've seen from the successful streaming businesses like Netflix and Amazon Prime, in the end, strong content wins. If you typed into Google now, I'd like some advice on managing virtual teams, you'll get 122 billion answers. There's no way anyone could go through all those, let alone work out which ones are any good or not. So the core is to have great content, and also to have great content that fits one with the other. So the things you learn about inclusion also feed into the things you learn about leadership or management or how you serve customers. So content becomes one core part of the behavioral change ecosystem. And the second core part is the distribution channels. Now, again, for any ecosystem to work, it not only needs exceptional content, it also needs to have integrated the live and the digital. The live, because it's very hard to change our behaviors in these quite complex areas without talking to a human being, without having a chance to work out the nuances and understand what it means to me. But it's also really hard to change our habits unless we get prompts and reminders at the moment of need, at the time when we're about to address something or procrastinate and avoid addressing it. So we need both of those together. Now, these are critical, but actually organizing them and making them work is as important. So we need strong platforms and operations that enable our clients to approach this always-on system with a relative degrees of ease and a significant potential cost saving. Now, these three elements are vital, but actually the magic that makes them work, the bit that gives them hyperdrive, is data. Data, and as data is collected, the artificial intelligence to analyze that data and use it to constantly improve the system and to improve the experience for every individual who's a part of it. So to talk through a little bit about what this means in practice for an individual, I'm going to imagine a mythical Azim. He's a manager in an organization that you probably know quite well, maybe you even invest in it. And he is going through his own set of experiences. Maybe he downloads the app, maybe it's not an app, maybe it's something else, but he then takes a personal diagnostic and he identifies his development areas and his opportunities. What does he want to get great at? Maybe it's great at negotiation or great at being a manager of people. He's just taken on supervisory roles. And off the back of that, he gets some specific insights and resources that are linked to that. And maybe an email potentially on inclusion that helps him think about a way in which he can engage and bring in people who perhaps are feeling unheard or unlistened to. Then off the back of that, he starts to pre-populate his one-to-one agenda. So automatically it's feeding into his workflow with specific things that he wants to address and discuss. He gets a calendar reminder. Actually, this is quite complex. Why don't you book a coaching session? And then indeed he has the one-to-one coaching session. And not only does he just turn up, but the coach has started to gather the data from all those previous steps. So the coach is actually quite well prepared. And she can go straight into the conversation with Azim, tackling some of the issues based on his strengths and his areas for development. He then gets a prompt to use this simulation. He then has a live session recommended for him in MindGym's language, a MindGym workout. He gets a couple of questions to ask in advance. Maybe next time we're in a meeting, look who actually does most of the talking, look who does most of the listening, you think, look who gets their own way. Then he actually goes to the session and has this live experience. And in it, he's using his technology as well. He may be voting in a couple of polls. Maybe he gives some feedback at the end, maybe a combination of other things that are integrated. And off the back of that, he gets his Alexa, who reminds him to check on his checklist. And then he gets a push notification with a video that's specifically targeted to him based on what we already know about him. And then he gets to rate and share the video. He goes to the group, and he actually maybe is part of a broader group that's discussing inclusion and how you bring people in or left out. And then he gets perhaps a badge for having acknowledged the fact that he's making progress in this area. And so the cycle continues. So this becomes an ever more personalized journey. It's always on, he's learning everywhere, and the continuous data personalizes the content and enables him to self-monitor. So that's how it changes the life for the individual learner. This is how it changes the life for how clients will buy with an ecosystem. Rather than all those different shapes you saw earlier on the chart, actually it's all of one piece because the pieces all fit together. And actually you could easily buy them from one single source or much fewer sources, all of whom are grounded in the same behavioral science, evidence-based approaches. And then as the client, you get your dashboard, which helps you understand where is your investment paying off, where are there particular needs where you need to dial things up or alter things, which sequence of activities is most effective, with whom, when, and potentially why. So this creates a whole different way in which organizations can power up their people, can ensure that they create the human advantage that drives business performance. Now, there are very clear benefits for the company. As you'll have seen, they're going to get lots more data, but as a result, they'll be able to deliver greater, longer lasting behavioral change. They'll start to see measurements like output per employee increase, We know, for example, that swapping a poor manager for a good one increases productivity by 12%, adding a new person to the team on average 11%. This is with frontline workers and service roles. And therefore, if you can start to show how your manager's performance is improving, you can start to see the outputs in productivity. And if you start to get a 12% gain in productivity across your workforce, that's worth tens, hundreds, or even more of millions. And therefore, the type of investment we're talking about starts to be looked at in a very different context. The data then helps me continually improve my ROI, so I'm constantly able to refine it. The fact it's always on and totally agile means as needs change in my organization, I can adapt what's in there. And I've got none of that 12 to 18 month downtime when nothing suitable is available. And I'm constantly getting better. And once it's up and running, the running costs will be significantly lower than some of the investments that I've been making today. So potentially much bigger upside and potentially lower running costs. But the other people who really matter is not just the clients, but the individuals who choose to take part or not. And why people like Azim, and hundreds of thousands, if not millions more like Azim will choose to sign up, is it solves my challenge now. I've got this particular issue with a negotiation I need to run or a team member who's not performing, and this helps me fix it. And as a result, I keep getting better. My problems start to get more complex, and the easy ones I start to have to solve myself. And it's personal for me, and it's easy to use. So this becomes a vision of the future that allows and sets me up in order that I can gain and learn and keep growing, and potentially actually have a portable Mind Gym account or behavioral change ecosystem account that I take with me one place to the next. So hopefully that gives you a sense of the overall picture of the enormous market opportunity we see that's available. But I'll now hand over to Elaine, our Chief Digital Officer, who's been instrumental in putting the strategy together, to talk a little bit more about how we at Mind Gym are planning to seize this opportunity.
Thank you, Octavius, and good morning, everyone. So I'd like to take a moment to explain how we got here before giving you some more information about our future plan. As you'll have heard, we first launched our digital products, eWorkouts, in 2017. And now those eWorkouts are about 15% of our revenue. And while the rest of the revenue took a hit with COVID in the first half, our digital revenue actually grew. And while that was great to see, the work we did at the end of last year showed that the revenue today is a small fraction of the opportunity that's out there. We found that not only was the market for corporate digital learning huge and growing even faster than the market overall, but similar to what Octavius shared, there were no dominant players yet to emerge or have yet to emerge. We also spoke with clients and potential clients, some of the largest and biggest brands in the world. And what we heard was that clients were looking for a very different kind of digital experience to support their employees and especially their high potential talent. Even more encouraging, I heard firsthand that clients wanted, they even expected Mind Gym to innovate in the digital space, much as we had done in live, and that we were one of the few companies they really believed could change behavior. So it was clear to me that we had the brand credentials to move into this new space, and it gave us confidence that we really were ideally placed to redefine the development and learning market again, and to capture this large and growing opportunity. And in doing so, to completely change our growth curve. And of course, that's what we're here to share with you today. The board approved this ambitious plan in December, and in January, we started building the team, which I'll talk about later. And we expect the team to be about 40 people by the end of this financial year. Then, of course, COVID happened, and unsurprisingly, we had to reshape that plan. But what we've made sure is to hold true to the strategy and vision, even as we change the short-term plan. And the other thing that we saw was, while COVID was certainly creating challenges for our clients, it was also increasing their demand for digital products as they had to find ways to support their teams now working remotely all over the world. And from everything we've seen and heard since, it doesn't look like we're likely to go back to the way it was. So we only expect the appetite for digital talent development to grow and to accelerate. And based on our current plan, we expect to start generating revenue from our new digital products in the next financial year. So now let me take you through a bit of our plan. We've split this into 3 phases. The first is very short term. We'll continue to enhance the existing e-workouts, our existing digital products. At the same time, we'll start to launch our first new digital products next financial year. And the following year, we'll start to roll out the first iteration of the behavior change ecosystem Octavius talked about earlier. So with our existing digital products, we've made a commitment to continue to improve them and specifically to make our most popular e-workouts accessible. That means that they can be accessed and used by any employee with a disability, which not only meets the industry standard, which is more important as we grow our business in the US, where it's becoming a legal requirement, but it also demonstrates our genuine commitment to diversity, equity, and inclusion as a business overall. We're also translating more of those popular e-workouts into more languages as standard, so we can serve our global client base even more effectively. And earlier this month, we launched a new pricing model offering clients an unlimited subscription to our existing e-workouts to drive take-up and usage. At the same time, we're starting to develop the first 2 products that move us towards that strategic vision. The first one is a digital content experience, one that starts to personalize the way employees use it as part of their day job. It's what we call at the speed of life, and it's always on in a way that only digital technology can develop. Nearly every client we've spoken to is asking for a product that fits into their employees' daily routine, that's there to support them as and when they need it. And with COVID, as you can imagine, that need's only intensified. So what is this always-on content experience? It's a set of diagnostics and other tools that deliver bite-sized, proven content and techniques, all of which are designed to genuinely drive behavior change. And it's there whenever an employee wants to access it, even commuting to work whenever we start doing that again. And this content is supported by nudges and prompts to remind the employee to practice, to engage. And we're constantly showing the participant how they're progressing. They have opportunities to share and rate content. So we start to create a social network, a cohort around the experience. And for our clients, we have dashboards so they can see the impact on an employee, on teams, on the organization, and we can look at what's working and what's not working, and when it's time to course correct. Our second new product is a digital coaching application that offers clients a way to scale coaching. Typically, coaching was offered to the executive or leadership teams. They'd be the only parts of a company that could really benefit. With digital delivery, we can roll this service out to many more employees cost effectively. And that means our clients can offer it to all levels of their organization. Given our large and respected coach network, we've got the experience to attract and train more of the high caliber coaches we'll need as the product rolls out. The platform itself is designed to match coaches to employees and to schedule the coaching session. But that's not what makes it compelling. What makes it really interesting for clients is we're building an end-to-end user experience that actually combines proven content with that coaching. And the coaching can be one-to-one or group coaching, depending on what the employee needs. And again, we're doing this with our clients' objective, challenge, or pain points in mind. So we achieve the behavior change for our clients while also supporting their employees. And with both of these products, we're creating, and we need to create products that are as good as any consumer product. So employees feel like they're really being supported, that we're helping them to thrive and to perform at their best. And at the same time, these products need to help our clients build their talent and their human capital and show them the data and analysis that shows behavior when it's changing and also when it isn't. And we plan to sell both of these new products on a subscription or SaaS model, and as a result, create more recurring business and recurring revenues, so we start to see greater revenue visibility over time. And now comes what I think is the really exciting part. It's when we take all the tools and techniques from the content experience and integrate them with the coaching application. It's the start of what we call the behavior change ecosystem. And Octavius mentioned, it's where we use data, and as we scale, we start to use AI to almost hyper-personalize the experience, where content and assets become even more effective driving behavior change. When every single interaction is based on data, that can be data we hear from the employee who answers a diagnostic, or even more intuitive, what we learn from the employee as they engage with different content. In the future, it will be the data that tells us and the employee when a coaching session or even a live session would be valuable, and the application is there to set it all up seamlessly. Most compelling, it's when we really start to offer truly integrated live and digital experiences, something MindGym is uniquely placed to offer, and very few competitors, if any, are likely to replicate. All of this needs to be built on a flexible, scalable technology platform and a data architecture that powers the always-on experience. And from the start, we're designing this with open APIs so we can integrate with and capture data from other platforms in the future. And of course, the only way we can achieve this hugely ambitious vision is to build a best-in-class team with all the key skills and experiences. And unlike many businesses that pivot to digital, we're not trying to do this by replicating what we've been doing in the live world. We're building the same type of capability that any pure-play digital business or digital disruptor would. We're organizing cross-functional mission teams of product managers, product designers, architects, content designers, engineers, and QA. And we're organizing them into teams accountable for a product, like the coaching application, or a capability, like our data set. And each mission team will grow as the product strategy grows and as we introduce more and more services. One difference, though, from other digital businesses is MindGym, as you know, is all about behavior change. So we also have behavioral scientists and behavioral psychologists sitting on our mission teams, always ensuring that we're keeping our drive for behavior change at the core of our product vision. We're also establishing a customer success function to ensure we can onboard and support clients on the new platform. And we're building new operational activities to scale the business as cost effectively as we can going forward. We're looking at a partnership team to identify opportunities to buy or partner. We're constantly on the lookout for ways to accelerate our product, content, or technology development. We don't believe we need to or should build everything. And finally, we've been really mindful of aligning this new digital team to the rest of the functions within MindGym, most notably the client and client service teams. So we ensure the whole business is ready to deliver on this exciting vision. When I've led digital transformations in other companies, it's really easy to forget this sometimes, to just build a digital team in a silo, and that never works. And of course, all of this will take investment. As Richard will talk about, we are investing £4 million this financial year into this digital strategy. And as you'd expect, we'll continue to invest going forward in both people and technology as we build towards that future strategy. And we've developed a 4-year revenue model taking us to FY25 to support the investment case. We've based most of that revenue projection on selling to our existing client base, about 600 companies, with only some modest growth from new clients. And we factored in a slower build in the earlier years. We've priced the products in line with either competitors or comparables in the business, even though we believe in future there'll be opportunities for premium pricing. And in a similar way, we believe the new digital proposition will actually complement our live service and possibly increase demand for it. However, to be conservative, we have assumed some existing revenues will be cannibalized. And as I talked about earlier, revenue will be on a SaaS subscription model, so we'll benefit from recurring business. And as we grow, we start to really change the economics of the business overall, and we can start scaling the company in a completely different way. And now I'll hand back to Richard to talk a bit more about the investment.
Many thanks, Elaine. Yeah, I'm just going to sum up on financials generally, but obviously including digital. Firstly, in terms of the rest of this financial year, which, as most of you I'm sure will know, ends on the 31st of March 2021, we are seeing a good recovery in our revenues in Q3, as I mentioned earlier, and Q4 is still looking uncertain at this time, and therefore we anticipate revenues within a range, and we're making that range between -20% and -30% below the prior year. We expect our second half to be profitable, and we expect to claw back some of the loss in H1 as we continue to invest, as Octavius outlined earlier. As Elaine mentioned, we are going to continue to build the digital team up to a total of 40, and we had 19 at the end of September, and we've got somewhere in the region of mid-20s now. So the cost of those people in which we're capitalizing will increase in the second half more than the first half, and we anticipate 4 million for the full year. There'll be no impact on the current year, though, in terms of PBT, as we'll start to amortize the cost of this from next year when products start to get launched. The cash balance will continue to decline this year because with the recovery of the revenue, we're seeing working capital increase, and we're seeing a higher level of CapEx being spent on digital. We anticipate our cash at year end to be within the range of 9 to 11 million, reflecting these investments. So beyond March, it's really quite hard to call with the continued uncertainty of COVID, and therefore too early for us to formally reinstate guidance. However, to build on Elaine's point around our digital investment plans, we've done extensive sort of investment appraisal and modelling all the way up to the end of FY25, so 4 and a bit years. We've looked at lots of different sensitivity cases, and we've also reflected the change in revenue recognition with these new products. As Elaine mentioned, they're going to be SaaS based, so that's going to have an impact on revenue, PBT and cash, so that's all been reflected. However, the market, we believe, as Octavius mentioned, is huge, and the potential for returns on this, especially with the high margins on the products that we're going to get, are potentially very, very large. And we've done lots of different scenarios, and there's many ranges that generate strong ROIs. Needless to say, with the constant uncertainty in the size and scale of this project, we're going to be continually reviewing our investments. We anticipate funding the growth, the digital investment from our existing profits and cash generation, given our balance sheet strength. And for this reason, we do not expect to reinstate dividends, at least before new products start to be cash generative, as Elaine mentioned in FY23. So now back to Octavius, who I believe is going to sum up.
Richard, Elaine, thank you both so much. And to bring us broadly towards the conclusion of our formal proceedings, I wanted to share a little bit, just a reminder of the enormous market opportunity that we have in front of us. That we see a vast market of $100 billion and growing, and possibly larger than that, a market with no dominant players and yet good profitability. And we believe very strongly that the winning proposition will be a form of aggregation and integration. So the question is, why is MindGym well placed to win? And we think there are a number of reasons why we are in a particularly strong place to seize this opportunity. First of all, with content being the king, 20 years of content proven to drive behavioral change sits in our library. MindGym IP tested with 3 million plus professionals who've been through MindGym programs and countless client case studies. We've also got established relationships with much of the FTSE 100, much of the S&P 100 and the Fortune 500. And therefore, what we're offering here is an adjacent proposition, which will grow our share of the client wallet, but where we already have relationships, as Elaine talked about, where we are known, respected, and people are actually looking for us to come up with the digital innovation to match our live innovation. One of the challenges with a behavioral change ecosystem will be having enough people using it, enough data to drive the AI. We already have 500,000 professionals attending live Mind Gym events a year. So therefore, even if that 10% of those become regular users, you start to get quite a lot of very valuable data quite quickly. For the blended live virtual and digital, we've already got a 500 sessions a month capacity that we're delivering out in 50 countries. And actually that capacity can increase significantly because we have over 300 qualified coaches and many others ready to join and become certified Mind Gym coaches. And we have a track record of selling digital to products. So it's not like other live businesses that don't have digital as an add-on at the side. We've already shown that digital can work and that digital can be bought as part of Mind Gym, and that the next opportunity is to sign up for the next level of digital, for which we've built one of the strongest digital teams in a traditional live business that's operating as a digital business and also integrating with the rest of the organization. So we feel incredibly excited that we at Mind Gym are ready for tomorrow. And as a result, we will equip our clients to be ready for tomorrow too.